recording. If it wasn't, a lot of people are going to come to my house. All right. Let's see what next candle does here. Perfect. Now we have a candle moving down, right? Now, is this still a good trade, right? I would say that maybe this candle was the trade right over here, but at the same time, we're approaching this support. So this trade is a very risky trade because in a way, we're just ranging here, right? So this is a very risky trade. We're going to go over some examples which are risky and less risky. So this goes into a very risky trade. Let's see what happens next. Still ranging, and then you had like a little bit of a fake out, but eventually we started to move up. Always look to the top left corner. Yeah, exactly. So let's go through what happened when these candles started to move up. Okay. So you waited here for this candle to form. You waited here for this candle to form. So this candle broke out here, right? This candle broke out. So now essentially what you had to do is you had to wait for this candle to form some sort of a resistance to move further down. But what happened? This candle closed back in the range, so now there was still no trade. And then you had this candle form with a wick, which is still no trade. And then you had this bullish candle, which moved above all the candles to the left. Right? So your trade would have been on this candle, after this candle, because you wanted to wait for a rejection. But either way, in this consolidation, this was very hard to gauge what's going to happen. Right? Very, very hard to gauge. This is where most people, take losses. Oh, what's this? Makes sense. Yeah, so this is where most of your losses are going to come from, because price is going to start to range and you will start to take buys, you will start to take sells, you will start to see things that don't exist, and at the end of the day, you're going to end up with like a large chunk of your account gone to the market, right? And then you can't call the market, say, hey, I'm sorry, I didn't want to take this trade. So this happens. So when you have resistance formed and you have support formed, it's very important that you just wait or you just stay away. Because some days what's going to happen is the price is just going to range. Price is just going to range, and if you're trading, let's say you're JPY and price is ranging, there's no trade. It's just waiting. You're waiting and waiting and waiting. I think that happened on Thursday too. We were in Euro JPY buys and price is just ranging for so long. I just exited our positions because it reached our comfortability level that, okay, we could not hold it anymore. All right. What candles reach support? Okay, so this was supposed to be what happens when candles reach support or resistance. Okay, how do you know if it's an easy day or a hard day, or is it easy to spot on candles? Yeah, so we're going to go on some examples here, so your question is going to be answered. We're gonna ask questions at the very end because most of your questions are going to be answered. All right, what happens when price is trending bearish or bullish, right? What happens? So you come to the charts and you see that you have bearish candles forming, and these bearish candles are moving down, right? You have big bearish candles moving down, and to the left-hand side, you see some sort of a support here, and you have bearish candles moving down, right? So what do? Normally, what you would do is that you would say, okay, you know what? Since we have bearish candles forming and there's a 4-hour support, so we're going to try to take a buy here, right? So this is a very bad idea because all the candles are going against you. Your idea is correct that you're trying to take a buy on support, but then you have to realize that all candles are going against you. They're all bearish candles. There's not a bullish candle in sight. So you always have to wait for candles to at least turn bullish so that then you can say, okay, you know what, maybe now we have found support, so the probability of it rejecting is higher because on the 1 hour and the 30-minute we have found support. So there's a high probability that now we're going to start to move up and maybe retest the level that was broken or whatever the case is. But once price is moving down and you see that the destination of support is close by, just wait. Just wait for price to reach that area, and then wait for price to form some sort of a support on the 30-minute or the 1-hour time frame to see that, okay, now we are forming some sort of a rejection to continue in the opposite directions. Now, that's going to be a counter trend trade, but you have to understand that smaller time frames, they create the overall higher time frame, right? And the same case is when you have candles moving bullish, you have larger candles moving up, and then they're reaching some sort of a resistance. So we're going to use the same support as resistance here. We're reaching resistance, and you're trying to sell. A lot of people do this, you know. Like on Wednesday, I had someone taking sells on USDJPY in Asian session when it was moving bullish, right? So when it's moving bullish and it's oh, I had 2 hours of REM sleep. so so when it's moving bullish and you have resistance, your idea is correct to take a sell, but you have to wait because you never know, man. This candle can just continue moving up. This can, or when the candles are bearish, these bearish candles can continue moving down. Like a lot of people here have faced that. Like when you're trying to take a buy, when the price is trending bearish, you're trying to take buys, you get fucked because candles just keep moving down, and you're saying, "Oh man, what's happening? I moved my stop loss. This thing is still moving down. Like, when do I close? When did it stop?" And when it's moving down, you start to panic because then you start to look left and you start to see imaginary supports, right? You start seeing imaginary support, and you're like, okay, well, it's moving down. This is probably the support, and by the time price reaches this area, what happens? You have a massive push down, and then the next candle starts to move up. That's happened to a lot of people here, right? This happened to me too. It's very normal. Like it has happened, you know, because we're trying to call, this is what they call is that you're trying to call bottoms when price is moving down, that you're saying, okay, we've reached a bottom without price forming a bullish candle, or it's called calling tops, that when price is moving up, right? And you're saying that, okay, we've reached the top area, so now we're going to sell right over here when all candles are bullish. So you have to wait for candles to form bearish or bullish, like whatever you want, right? You have to wait for candles to form in your direction so that you can say, okay, now I have some sort of confirmation that candles are going to move my way. Make sense? So just don't take opposite trades when the candles are moving. Like it looks good that you had a wick entry, but it's not going to happen often. Right? It looks good for Instagram. It looks really good, but it's not going to happen often, trust me. All right, what do we have here? Always look for potential areas of destination. Yep, exactly. So this means is that when you have price moving down, right, and you're looking at a support to the left, so that's your destination, right? This means that once price is moving down, now you have the opportunity to maybe take a trade till that support. Because think about it, right? Now, there's someone out there who is trying to take buys when price is moving down. So more often than not, those buys are going to get stopped out because the momentum, because the momentum is bearish and we're moving down, right? So when you're looking to see that, okay, wait a minute, so if we're moving down and there's a support over here, and there's strong bearish momentum, we are in New York and London overlap, there's a high chance that price is going to continue down to this support, right? So what do? You jump to the smaller time frames and you start to see that, okay, now when price is moving down, it's probably going to do something like this and then start to move down. So you're looking for mini resistances to be formed maybe on the 30-minute or 15-minute to see that, okay, now if, like, you know, you can say that, okay, maybe if a resistance is being formed somewhere over here, and then you can say that, okay, now we can probably have a stop above this area because the trend is bearish and we're selling resistance in a bearish market. So there's a high chance that price is going to come down to this support. Makes sense? So that's what you say, okay, now we're trying to trade the trend. Because in the opposite spectrum, if you're trying to take buys, man, you're just counter trending right here when there's no confirmation. Right? So always look at it this way. And in the opposite way, when price is moving up and you look left to see that, okay, there is some sort of a resistance here, and this is where price starts moving down. So there's a higher chance that price is going to continue moving up, and you look for the same things to happen, right? Sometimes price is going to do something like this and will move up, right? So if you are not looking for confirmations, you're going to look at this area and say, okay, now we're consolidating, so we're going to move